When it comes to investing, one of the best and easiest ways to diversify your portfolio is through the use of an ETF or an exchange traded fund. Think of an ETF as a basket of stocks. Some ETFs have large baskets, some have small baskets. ETFs come in all shapes and sizes. In today's video, we're going to take a look at 3 of the most popular ETFs on the market today, break them down side by side, and determine which of them is the best buy right now. I actually own all 3 of these ETFs, but I'm only adding to one of them at this moment. And I'm not going to leave you hanging throughout the entirety of the video. I'm going to let you know which 3 ETFs we're going to look at right now. They are SCHD, SPY, and QQQ. So with that being said, if you could do me a huge favor and show your appreciation by clicking that like button down below, subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin and jump in to look at these 3 popular ETFs, let me tell you about one of my favorite platforms I utilize for stock analysis. And all of this analysis is at the touch of a button. Let's take a look at Broadcom, stock ticker AVGO, as it's widely held in each of these 3 ETFs that we're going to look at today. We're going to dive in utilizing today's video sponsor, Moomoo. So here's a look at the Moomoo app. Right when I open it up, I can see my entire watch list. But if you want to search for a particular stock, you could just type in that stock ticker right away, pull that up, and there we go. There's our Broadcom right now. So when we open this up right here, this is Broadcom. You could see that they have a market cap of a little over $600 billion, and it pays a dividend of roughly 1.4%. Other helpful metrics you could see right on the app here is its price to earnings metric, as well as its price to book metric. If you scroll down and go to the company tab, you could see the company's latest earnings and how those fared year over year. You could see analyst ratings, as Broadcom is currently rated a strong buy, as well as company's valuation. Continuing to scroll down here, you could see a revenue breakdown broken out by segment, as well as a very useful tool here. You could see estimates for revenue, EPS, and EBIT moving forward into the future. As you can see, the Moomoo app has a ton of information just at your fingertips. And right now, Moomoo is practically begging my followers to check out the app for yourself, as they're giving away up to 15 free stocks for opening a new account and making a qualified deposit. Check out the link down in the description below and take advantage of it. All right, let's jump back into today's video, taking a look at these 3 popular ETFs, SCHD, SPY, and QQQ. Again, I own all 3 of them, but I'm only adding to one of them right now. And we're going to take a look at all 3 of these ETFs side by side throughout the entirety of today's video. Let's begin with SCHD. SCHD is obviously a dividend-focused ETF, investing in more than 104 dividend-paying stocks across various sectors, something we'll look at more here in a second. The ETF currently has $52.6 billion in assets under management. Next on our list is SPY, or the Spider S&P 500 ETF. There's a lot of great S&P 500 ETFs out there. They're pretty much all the same. The things you want to compare is obviously expense ratios, because they all track the same exact index, the S&P 500. But where some of the differences come into play is if you utilize options. So for me, I utilize options on a weekly basis, selling covered calls, selling cash secured puts. And for that reason, that's why I prefer SPY. There's a lot more in terms of volume and option contracts that are traded with the likes of SPY as compared to other popular S&P 500 ETFs like VOO or IVV. SPY, as you already know, tracks the S&P 500, so they invest in 500 of the largest companies here in the US, and SPY currently has assets under management of $487 billion, the largest ETF that we have here. And the third ETF on our list is QQQ, or the Invesco QQQ Trust, which is predominantly tech-heavy ETF tracking the NASDAQ 100. QQQ currently has assets under management of $247 billion. So in terms of size, as we could see, SPY easily the largest, followed by QQQ and then SCHD. Now let's take a look side by side at a few more details between these 3 ETFs. As you can see, SCHD currently trades at a price of $76.83 per share. It has an expense ratio of just 0.06%, a dividend yield of 3.5%, the highest on the list, and a 5-year dividend growth rate of 13%, easily the highest on the list. SPY currently trades at a share price of $498 and change, has an expense ratio of 0.09%, a dividend yield of just 1.3%, and a 5-year dividend growth rate of 5%. And then lastly, QQQ, which currently trades at $433 per share, has an expense ratio of 0.2%, a dividend yield of just 0.4%, and a 5-year dividend growth rate of 5%. Now let's take a closer look at performance for these three ETFs, and I'm sure you could probably already guess, based on what we saw in 2023, which of these ETFs has been the best performing of the three. Over the past 10 years, we could see that SCHD has gained 115%, SPY has gained 170%, and QQQ has blown them all away by gaining 384% over the past 10 years. That's share price performance. Now let's take dividends into the equation and take a look back. If we were to invest $10,000 10 years ago into each of these three ETFs and compounded our dividends on an annual basis, what that would look like. SCHD would have a total value of $29,389, while earning a total dividends of $5,755 that were compounded annually. The year 10 annual dividend income was $981. So in 2024, you would be knocking on the doorstep of $1,000 per year. SPY would have a total value of $31,316, while earning dividends of $3,050 over that period, and their year 10 annual dividend would be $411. And then finally, QQQ would have a total value of $52,675, while earning dividends of $1,845 that were compounded annually, and their year 10 annual dividend would be just $246. So going back, when we include dividends, SCHD is actually right there with SPY. Had SPY not had the phenomenal year they saw in 2023, SCHD would likely be outperforming the S&P 500 over that same 10-year period. But otherwise, it's still a great complement to either of these ETFs. Okay, next let's take a look at the top 10 holdings for each of these ETFs, as well as the sector breakdown. Let's begin by taking a look at the top 5 sectors in each ETF and their exposure to these sectors. SCHD's largest sectors include healthcare at 17%, industrials at 16.6%, financials at 16.1%, technology at 12.6%, and consumer staples at 12%. The SPY top sectors include technology at nearly 31%, healthcare at 13%, financials at 12.4%, consumer cyclical at 10.6%, and rounding out the top 5 is communication services at 9.1%. And finally, the top sectors for QQQ. Technology makes up over 50% of the ETF, followed by communication services at 15.8%. Right there, those were the top 2 performing sectors in 2023. The third top sector is consumer cyclical at 13.2%, followed by healthcare at 7%, and rounding out the top 5 is consumer staples at 6.6%. So as you can imagine and probably likely already know, QQQ and SPY, especially at the top, is going to have a good deal of overlap, but they're not going to have as much overlap when you compare them to the likes of SCHD. When it comes to QQQ and SPY, they have roughly 45% overlap in terms of weighting. When you compare both of those ETFs to SCHD, that number drops down to roughly 10% overlap. Now let's take a look at the top 10 holdings for each of these ETFs, beginning with SCHD. As you can see at the top, you have Broadcom, Merck, AbbVie, Amgen, and the Home Depot. Overall, the top 10 holdings account for 42% of the fund, and in total they invest in 104 total positions. For SPY, the top positions include Microsoft, Apple, Nvidia, Amazon, and Meta Platforms. And the top 10 holdings account for 32% of SPY, and as you can imagine, they have 504 holdings. And then finally, you have QQQ. Very similar in terms of top holdings. You have Microsoft, Apple, Amazon, Nvidia, and Meta. The top 10 holdings account for 47% for QQQ, and in total, they have 102 total positions. So which of these 3 solid ETFs is a better buy right now? As we've seen over the past year plus, the technology and communication services sectors have had huge run-ups, and valuations for a few of them look quite stretched, especially when we look at the top 5 holdings of both QQQ and SPY. They're relatively the same. That's why I'm going to side more with SCHD. I'm looking more for a broader rally here in 2024, where technology and communication services don't just run away from the pack. And if that happens, that's going to benefit the likes of SCHD a lot more. Regardless, SCHD is a great complement to both QQQ and SPY, as those two ETFs have a large exposure to technology, and you never want to be overexposed to one particular sector. So with that, SCHD technology was only the fourth or fifth largest sector. That gives you a lot more broader diversification for your portfolio, which makes SCHD that great complement I'm talking about. So down in the comments section below, let me know right now, which of these three ETFs do you think is the better buy going forward? I'm not saying that one is a buy and the other are sells. I just want to know which one you think is the better buy right now going forward. Let me know down in the comments section below. And if you haven't done so yet, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.